Stocks recover after a lower start. The markets take concerns of a high tariff fallout on businesses in its stride and hopes for a trade deal soon. Realty and energy are the big drags, while FMCG sees some green.
Jio Financial Services will make a preferential issue to promoters of over rupees 15,800 crores that will see them up their stake to 51% post the issue of equity capital. The stock perks up on this news.
Tata Motors is set to buy Italian CV maker Iveco for €3.8 billion to gain access to key technologies and build a presence in Europe and South America. The move precedes the demerger of Tata Motors CV business.
Infosys CEO Salil Parekh tells CNBC TV18 there will be no layoffs and the company is on track to hire 20,000 graduates in FY26, and he also sees AI expanding the market for IT services and expects large deals soon.
US President Donald Trump says the US will levy a 25% tariff on India along with a penalty for using Russian crude, even as he calls India a friend and holds out the possibility of a deal soon. Experts believe a trade pact is still in play.
Hello, good afternoon and welcome to Halftime Report on CNBC TV18. You've tuned into CNBC TV18. We're coming from the Motilal Oswal CNBC TV18 studios. I'm Vinny Motiwala. With me is Ekta Batra as well. Ekta, good afternoon, and surely a good afternoon that's shaping up. I should run away from the morning given that the fall that we've seen, but a good recovery in the markets. And I think a lot of earnings that were reported as well yesterday, we're seeing a good move coming in, right? Whether you look at HEG, Kaynes, Sagility, managing to hold on to gains. Recovery coming in the markets. That worry of 25% tariff surely is there, but that's something we'll be watching out for.
Hi, Vinny. Yes, absolutely. You know, the markets are still a little under pressure, you'd have to say, for the mid-cap or the broader markets, at least at this point in time. So there is definitely some amount of uncertainty with regards to what the future could hold in terms of the impact on businesses with regards to a 25% tariff, whether or not there will be a trade deal going forward, and, what the trajectory of a couple of these sectors would look like in terms of earnings. But nonetheless, it is the Nifty levels of around 24,598 which we would be watching out for. So that would be a crucial level to watch out for in terms of the intraday low that we could expect. And of course, it is F&O expiry, so that's the other key to watch out for. Separately, earnings today, we do have around 6 Nifty companies which will be reporting their numbers. HUL has already come out with its numbers, but separately we have Sun Pharma, Maruti, Coal India, all of these companies which will be reporting their numbers. So we have a lot to watch out for in terms of stock-specific cues today. But on to the big story then. United States announced 25% tariffs on imports from India and an unspecified penalty, quote-unquote, over India's purchases of Russian weapons and energy. Let's go across to Hormuz. He has the list of stocks and sectors that are likely to be impacted.
Well, US President Donald Trump's announcements of a 25% tariff last evening on India, along with these unspecified penalties, has come as a surprise to many who were hopeful that a trade deal would be signed before the 1st of August deadline, while some were hopeful of a lower tariff rate in case the talks do prolong. Now, this has now put almost all of India's export-oriented sectors in the spotlight. Now, take a look at these sectors that may be impacted. Auto component makers, shrimp feed exporters, industrials and consumer electricals, now gems and jewelry, textile stocks, mobile and electronics, and all of these sectors now are in the spotlight. Now, let's break it down sector-wise for you, and starting with the auto components first. Now, Nuvama believes that the tariffs on CV and other components, which was currently 10%, will now increase to 25%, and that will have negative ramifications for stocks like Bharat Forge, Ramkrishna Forgings, and Balkrishna Industries, which has a significant export exposure as well. And the negative ramifications also will be because of the demand falling and costs rising. Now, textile appears to be the most impacted here, as this list of companies from Gokaldas Exports to Wellspun Living, Pearl Global, Indocount Industries, all of these companies have exposure of anywhere between 50 to 70% of their overall top line coming from the US market. Unsurprisingly, these stocks are down anywhere between 6 to 10% in today's trading session. Now, Elara believes that this will have a limited impact on the cables and wires segment, and most of these companies only have a 2 to 5% exposure to the US market. However, within the industrials basket, Elara has signaled out APAR Industries as one that could see an impact, as it has a 15 to 20% exposure to the US market. The other one in this list is KC International, but its exposure to the US is through its subsidiary, and that to a small number, that is 5%. Now, India's capital goods companies are also in the line of fire, where Cummins is 12 to 15% exposure to the US is mostly to its parent company, Cummins Inc., while MTAR Tech has 62% of its overall top line from the clean energy business, which has a US-based company as a major client. Now, most of the EMS companies of India like Dixon, Amber, they don't have any significant exposure to the US. Kaynes Tech also has only a 2 to 3% exposure, and on expected lines, Kaynes is moving higher today, also reacting to results, of course, but Dixon and Amber have not seen a heavy fall either. Now, within the turbine companies, Elara has singled out two names: Azad Engineering, where 23% of its FY25 revenues came from the US, while for Honeywell Automation, the US market brought about 8 to 9% of the overall top line. Now, gems and jewelry is another sector that is impacted here. In a statement issued last evening, the GJEPC said that the Indian gems and jewelry sector in particular stands to be severely impacted, and that nearly 30% of industry's total global trade comes from the US. It's also said that the blanket tariff of such magnitude will inflate costs, delay shipments, and distort pricing. Well, it's been a resilient reaction by the market so far, but the affected sectors are certainly taking it on the chin. We'd only hope that a deal is signed soon and more clarity emerges on what the future entails.
Absolutely, Hormaz. Thank you so much for that. Important sectors and stocks to keep an eye out on. It's 25% tariff and what's actually going to be happening there. But on that note, we're going to slip into a very short break, and a reminder for our viewers: unlock a world of exclusivity, expertise and influence. Become a member of CNBC TV18. Access our premium members only experience on CNBCTV18.com. The membership includes access to CNBC TV18's flagship events, interactions with our journalists along with curated studio tours, e-learning sessions and master classes, and curated lifestyle benefits.
Welcome back. Well, for the markets, we have the Nifty, which is down around 61 odd points. Just want to point out Orchid Pharma. That stock is up around 5 odd % today. And the news is that they've bought back rights to an antibiotic that they themselves had discovered many years ago to the company that they had outlicensed it to, Allecra. So interesting news coming in there. As you can see, the stock is locked in upper circuit, doing well in today's trading session. But let's talk about numbers then. IndiGo's Q1 earnings missed street expectations with muted revenue growth and a decline in profit. We did speak to Peter Ebers, who's the CEO of IndiGo, to discuss what the impact was of the quarter gone by and what's the outlook here on. Listen.
After that positive start in the first 2 weeks, we have seen quite some adverse events for the industry. Clearly, it was the Pahalgam attack, then Operation Sindoor, then airspace closures, then more airspace closures, and then obviously the tragic AI-171. And despite all these elements, the market has still grown, and IndiGo indeed has been able to grow even more. So I think it shows a lot about the resilience of the Indian market. The start of July is on a positive note. We can call it normalization of what's happening. Traditionally, Q2 is a somewhat softer demand and has a somewhat softer demand as Q1 and even as Q3. But clearly, we see a normalization and we see demand coming back. Despite these circumstances and some of the adverse scenarios unfolding in this quarter, still there was a growth in the market, and we see that actually continuing in Q2, and we're optimistic on the further normalization and further growth in Q3 and Q4 of this year. The fact that we have a capacity guidance, which we gave at the beginning of this year, and we maintain our capacity guidance for the full year. We have a planning for the second quarter in terms of capacity, which is still a growth compared to last year, but a growth less significant as we see in Q1 and Q3 and Q4. A young fleet translates into an efficient fleet, and with that we are one of the leading operators in the world when it comes to fuel efficiency. Secondly, we had a couple of damp leases in previous quarters, which we have not operated in the last quarter, and we will also not operate those in the second quarter for two reasons really. One is we see a reduction of the AOG situation, the number of planes on the ground. That situation today is markedly better than it was at the same point last year. And secondly, clearly we adjust our capacity based on seasonality in the market. So with that, we do expect to continue to benefit from that fuel environment also for the quarter ahead.
Okay, that was the management of Interglobe Aviation. Just a quick point, I'll just make the flashes at the bottom of your screen. The sources are saying that there is no immediate impact of 25% tariffs on smartphones, laptops, exports from India to the US. The US had provided tariff exemption on these equipments, and this is for a period of 90 days, that is till the 14th of August. And that's when the review meeting will be held for that section 232 under which that exemptions are there. 14th of August, that's where this will be reviewed. Currently, obviously, there's no immediate impact of this coming in here. So that's something that we'll be keeping an eye out on. But, keeping it going with the earnings as well, then we have SIS that have reported their numbers as well. Overall, it looks like an inline set of numbers that came in from the company. But exciting is that the revenue growth, now that's back to the double-digit mark. The margins have come in stable as well. To talk to us about the outlook of the company, we have Dheeraj Singh, CEO of SIS, joining us right now. Mr. Singh, good afternoon. Thank you so much for joining us on the show. Let's start by talking about that revenue growth number, right? Y'all have spoken in the past as well that you all do want to achieve that double-digit growth. FY26 has started on that good note. Do you see this continuing through the rest of the years? Because last couple of years was high single-digit is what you all managed.
Correct. And our aspiration is not just to be in double-digit, but to be in the mid-teens. So we have given the guidance of around 14-15%. And we are near that. We are up almost 14% year-on-year basis. We see the trend continuing for the next few quarters. Our run rate for June, for the first time, it has crossed more than 1,200 crores. And Security India is more than 500 crores run rate. Security International is more than 500 crores. Facility Management is more than 200 crores. These are all-time highs. And on just this run rate basis, we are confident that we should end the year at about 14,500-15,000 crore and in line with our aspirations.
Okay, all right. What about margins? If you could just give us a little more details in terms of margins, because we understand that in FY25 you did manage to weed out a lot of the low margin contracts which had impacted your business. So now what are we expecting in terms of margins? Because if I do look at your trajectory, it's actually a multi-quarter low in terms of margins.
If you look at the EBITDA growth from on a year-on-year basis, because our business does have seasonality impact. The first quarter, there are a lot of churn in the contracts. There's a lot of SG&A impact with the annual increments, etc. So on a year-on-year basis, we've grown about 10% on the EBITDA in absolute rupee terms. India, in terms of margin percentage, security has held ground, and it's now around that 5.4-5.5%. We are very happy that our facility management business, which we had been saying is on the upward trend on the margin percentage. It's now almost 4.8%, which was about 4% a year ago. So both the India businesses are doing well on the margin percentage, and we see this improving definitely on the facility management side for the next few quarters. International has definitely come under pressure this quarter on the margin percentage, but if you look on the normalized basis compared to last year, it is a slight improvement. What has hit the international business margin are the grants that had come in the last quarter in the Singapore business, the government grants. Those have not come. We had won a lot of the contracts in the defense sector in the last quarter, which have started in this quarter, and there are a lot of setup costs which have depressed the margin. And lastly, in one of our businesses in Australia, SXP, we have restructured the entire management team, which involved a one-time cost in this quarter.
Okay, so these were the impacts that came in on the international business in Q1, but from Q2 onwards, could we expect it to come back to those normal levels, especially in terms of margins also around that 4% mark and growth also that we are watching out for from the international business? Also, talk to us about the Australia side of the business as well.
The growth in the revenue side for international business is very robust. As we mentioned, last year was the highest ever new revenue, new sales that we had booked of more than 100 million Aussie dollars. A lot of that will now get translated in this year in terms of actual revenue. And so the revenue for the next few quarters will remain very strong. We are working very actively on the margin side to bring it back towards the 4% plus.
Okay. Tell us a little more about the facility management business. How many contracts did you manage winning this quarter? How much are they worth? And from which sectors?
So facility management, we got more than 25 crores of new contracts per month billing and in the quarter. And they have been across all sectors. We have seen very strong growth in the manufacturing, in the healthcare side, in the logistics side. So facility management continues to be working across all sectors quite actively.
Okay. And just a quick word in terms of your current status for the DRHP that was filed by the company for SIS and Prosegur. This was filed somewhere around in March. So any update there, listing plans, what is it? Anything that you could highlight?
Yeah, so the good news is that just 2-3 days ago, we got the approval for go ahead from the BSE, NSE and the SEBI. So now we are, our clock is ticking for the 12 months window, during which time we'll have to list.
Okay. Thank you so much, for joining us on the show, giving us insights, and obviously we'll be waiting out for that listing that will be coming in as well. But on that note, we're going to slip into a very short break, and here's some good news for our viewers. India's business news leader is now a click away. Introducing CNBC TV18's all-new app. Get instant access to breaking news, in-depth articles, financial world updates at your fingertips. Download the CNBC TV18 app now from the Apple Store, Google Play Store, or you can just scan the QR code on your screens. Welcome back to Halftime Report on CNBC TV18. Let's pull up what the market is doing right now. We are seeing a sharp recovery that's coming for the Nifty Bank as well. Sensex is up more than 800 points from the day's lowest point. Look at the Nifty inching toward that green, right? It's almost there. Nifty Bank is just flip-flopping between the green as well. It was a slight bit of a green that we're watching out for, but a sharp recovery that we're seeing coming in from the markets. Nifty has reclaimed the 24,800 level. And let's not forget, a lot of movers that have come in for the Nifty 50. You have HUL, you have Eternal, Axis Bank. That is something that in the last 20 minutes has seen a bit of a gain coming in. And top gainers, obviously, Geo Financial Services, HUL today, managing to pull up some bit of that market.
Yes, absolutely. And I think, the recovery is also coming into the broader markets because that was really taking the brunt. So the mid-cap index, when we started the show, was down close to 1%. And now that's recovered to around a 0.7% cut at this point in time. The advanced decline ratio should probably also come up for you because as of now, it stands at around 1,600 stocks advancing to around 2,300 stocks declining. So let's see whether that ratio narrows or not. Coming back to the Bank Nifty, we have the likes of Kotak, which is seeing buying from the lows. As you can see, there is some amount of a gap, which is less than before, at least for the advanced decline ratio. In terms of the Bank Nifty constituents, we have Kotak Mahindra Bank, Axis, IDFC First Bank, ICICI Bank, Bank of Baroda, all of these stocks which are currently trading in the green. On the downside, it's PNB, which is reacting to its numbers. So separately, we have HDFC Bank, which is recovered from the lows. So that too is probably just about going to push into the green anytime soon. And State Bank of India as well, just about lower by around 0.13%. So overall, pushing our way through to probably recover and, push through to the green for the Nifty, which is just about lower by around 23 odd points. That's what's taking place in terms of the markets. We seem to be shrugging off those tariff concerns at this point in time. Maybe there could be a trade deal that we could probably be anticipating or hoping for. But Vivek now joins in. He has a more comprehensive list of all of the stocks which are buzzing at this point in time. Vivek, over to you.
Well, thank you so much for that. Given the fact that what we've actually seen, especially in the last half hour, has been a significant recovery. And like you mentioned, the advanced decline ratio from a large divergence now converging towards one another. What are the key stocks today that are worth looking at? HUL, results came in early morning. Actually saw good commentary coming, especially as far as margin recovery was concerned. On the back of that, higher by 3.5% today is HUL. Navin Fluorine, now this particular stock from the broad end of the market, saw a good beat as far as the estimates were concerned. Pricing action as well as operating leverage play out. That stock higher by over 3% today. Geo Financial Services, a large fundraise in a warrant issue. Most likely promoter would be hiking stake. That stock, the top Nifty gainer today. HEG, and along with that, some of the other names like Graphite India, very strong Q1. Company spoke to us earlier today. They're talking about price hikes. That stock higher by over 12.5%. And the entire EMS space has recovered quite sharply. Kaynes within that particular space, good set of numbers. Along with that, the company has maintained their revenue guidance. Remember, it's a sharp revenue uptick that they anticipate for FY26 of almost 60%. That stock, the broad end of the market's up almost 10%. Quite a few laggards as well. Top amongst the list being Hindustan Copper. Remember, today is the last day that particular stock will be in the FNO space. Copper prices yesterday fell significantly, almost saw a 20% downtick, so that stock lower. Indus Tower, while the numbers were largely in line, there is a lack of visibility as far as dividend payouts are concerned, and that has spooked the street. You're talking about CSE, the numbers largely in line came came post-market as yesterday, but the Malecon Discom loss is something that have expanded. That is something that the street doesn't like. CAMS, now this particular stock, just going into the results had corrected quite sharply, and today the results were a significant miss. That stock has seen quite a few multiples as far as valuations are concerned, getting at almost 4% lower. And Apar Industries, now this particular stock, remember, the company actually has quite a large amount of exports to the US market as far as conductors are concerned, 6% lower, the top NSE 500 laggard today.
Okay, Vivek, thank you so much for that. Important stocks to watch out for. A lot of movers on the back of their earnings. But let's go across to Nigel, who's here to tell us what's happening this afternoon in the world of FNO, given that we're seeing that slight bit of a green come in and the recovery from the day's lowest point has been quite good. Nigel, over to you. Now, what are we keeping an eye out on?
Well, Vinny, at the start of Chartbusters, what did I say? Don't roll out a recovery today, right? That's the way we started Chartbusters. And given that it's expiry day, it makes things even more interesting. And in Bazaar itself, in our chat in the morning when we had highlighted all the FNO cues, we suggested that maybe, in fact, the markets were prepared. They were sniffing that there's going to be some bad news on the tariff front. The rupee was very, very weak. That was one indicator. You have shorts that are loaded in the system from the FIs. And the last 1 month or so, the Nifty actually has underperformed. And the July series were going to be going on probably towards the lower end of the range. So that's telling you the markets were sniffing that, in fact, there could be some possible bad news. Now, the India VIX was surging away earlier this morning. If we look at it, well, that's come off a little bit from the top. And just take a look at the Nifty. Big recovery is what we are seeing. And when the Nifty recovers, both the pillars of the market need to hold its ground. So you have the Nifty Bank that's now moving towards the 50 DMA if you look at the intraday chart out there. And the tech index that's under pressure earlier today, that's recovered more than 1% from the low point of the day. So tech as well is making a bit of a fight back. Moving to the options data then, the 24,700 put, there's a mix of activity out there because the premium up there is only around 10 rupees. It was around 15 rupees at the start of today. So there is a bit of a punt that's taken in case we do see a slide yet again because this is an intraday recovery and we have expiry that will play out today. The 24,750 put as well, premium in that vicinity of around 18 to around 20 rupees. So there's a mix of activity being seen out there. But on the upside, the 24,800 call, the premium's down from around 100 rupees, it's come down to around 60 rupees. That's an important strike. And just looking at the options data and the recent highs and lows that you're looking at, the 24,925 to around 24,950, those are the levels that in fact the bears believe they can defend for today's trading session because those contracts will expire in the next few hours by around 3:30 p.m. today. So that's where the resistance comes in at. Support levels will be today's low, which is at around 24,635. And a low that we had a couple of sessions ago, which was 24,600. So you don't want that level to get breached on the downside. That's the low that we've seen for the series. Stocks that I'm looking at, there is some long addition that we are seeing on RBL Bank. Remember, just come out of the FNO ban. That's moving higher on good volumes, up close to around 2.5% the last time I checked, with big surge in open interest. And on the flip side, you also have Aditya Birla Capital that's seeing a bit of a short covering bounce. So the Nifty on the whole has seen a good bounce. You'll watch for that mark off around 24,925. If the bulls can get past that, then you can clearly see a big short covering bounce on the upside. But as of now, it appears that that is where the crucial resistance does come in at. Back to you.
Okay, all right, Nigel. Thanks very much for that. So that's on the FNO space. Just want to point out for the BSE IT index, there's been a recovery of around 280 odd points from the day's low. So that's the kind of intraday spike that we've seen in terms of IT stocks at this point in time as well. The Bank Nifty just about 60 points lower, so just about lower by around 0.1%. We'll take a short break. We'll get you more on the markets, a lot of stock-specific action once we're back. Stay tuned. Welcome back. Well, for the markets, like we mentioned, has recovered. So we have the Nifty, which is now in the green, up around 15 odd points. The Nifty at around 24,870. The mid-cap index also is now incrementally seeing buying from the lows, so it's just about lower by around 0.5%. The Bank Nifty, one of the key constituents for the entire Nifty moving into the green this afternoon, is now up around 90 odd points, so up around 0.15%. Overall, the texture of the market is looking much better. Seems as though the street is just about shrugging off the concerns with regards to what could take place on the tariffs. Maybe there could be some hope that the tariff amount would probably not go through in what is stated at this point in time. The advance decline ratio currently standing at around 1,664 stocks advancing to around 2,300 stocks declining at this point in time. Overall, markets looking good. The Nifty Pharma Index as well as a couple of other indices such as the oil and gas index. Two of these indices were in the red. So let's see whether there's any kind of incremental recovery which takes place in both of these indices.
Absolutely, will be important to watch out for in terms of whether this recovery is something that is going to be sustaining. But, you know, let's pull up some of these EMS player names as well, whether it's Dixon Technologies, Amber Enterprises, Kaynes Technologies. Why are all these in focus today? Specifically also, just a short while ago, we had an important update that came in from sources saying that there was no immediate impact on this 25% tariff on smartphone, laptop exports, as well as this is from India to the US. So there's no impact of that. There's an exemption that was there for the 90-day period till 14th of August, and that's when this will be picked up and reviewed again. Now, after this, we have seen a recovery that has come in for all these stocks. So can Dixon Tech also, sharp recovery, and obviously with the market, we're seeing a recovery as well. But Kaynes Technology, let's put the spotlight on that. Today, it's running away in trade, and this is, you know, after the management had reported their numbers, mixed set of numbers that came in Q1. Now, we're joined by Jairam Sampath, the whole-time director, as well as the CFO of the company right now, to talk to us about the outlook, what should we be watching out for as well. Mr. Sampath, good afternoon. Thank you so much for giving us your time this afternoon. Let's start with, obviously, you have the latest update that's come in terms of tariffs, but your exposure is not much, I believe. It's only 2-3%, right, overall, in terms of your revenue. One, overall revenue growth for FY26, that's come in at 34%. I think you'd guided for around 60% previously for FY26 as a year as a whole. So would you still stick to your guidance? And also, if you could just highlight any impact or any talks that you're having with your clients in the US as well, what is it, even though your exposure is lower?
Yeah, thank you. Thank you for having me here. And I think the global cues and the global let's say, geopolitical happenings don't impact so much in the short run. Of course, in the long term, they do. On that brief comment, I would like to say that this year's guidance still is intact. We see very strong uptake. Order book is as expected growing, about 7,400 crores of orders end of June. And the good news is that we see a good let's say, increase in profitability across the different sectors, not just one or two clients, but a broad brush. Our efforts during last 2-3 years have yielded some results, and now we are seeing an increase. And as we go towards other quarters, we probably have a better operating leverage too. So overall, we hold our guidance of totally consolidated level, about 4,500 plus crores of revenues. And of course, we had guided for 15.6% of EBITDA. So certainly minimum at a minimum, we'll probably achieve that number. The comment on the tariffs, etc., we had always considered a world which will become a little more insular and people would insist on local manufacturing. So strategies that we have said is geographical expansion. So that is also paying dividends to us now because it takes about a year and a half to set right those factories in the US. So we have now 2 factories in North America. So all in all, I think we are gearing up for whatever the markets and geopolitical forces throw at us.
Okay. So you're confident of your guidance in FY26, and you have laid out that you could probably achieve $1 billion in terms of revenue by FY28. You're factoring in any kind of gyrations when it comes to the entire tariff situation around the world into this guidance?
Yeah, so we think that at this point in time, if you really see the kind of exports that we will actually be doing, it will be either semiconductor, which is generally not touched by tariffs by any country generally. It's the more value-added products that are touched. And then, of course, there are critical areas wherein we export. And those areas, the alternative to the OEMs, if they are in the US too, are limited. And so these tariffs only kind of is a small, let's say, a small dampener to that demand. And most of the orders that we have for export execution, they're all placed for 10 years and 5 years time frame. They last longer than the government of the day. And so from that perspective, we don't think there is any impact. And we have factored in any such, let's say, downtrend that we may see because of our portfolio, which is very diversified. So I think this $1 billion by FY28 is very much reasonable and very much possible.
Okay. And sir, what about your OSAT business as well as the PSB business as well? Because I think you're aiming to focus and become more of that high margin, high electronic kind of manufacturing side is your focus. Next 2-3 years, what will be the contribution that will come in from both OSAT as well as PSB? Yeah. And what is the current revenue there?
Yeah, so of course, currently these projects are just greenfield projects, factories just getting prepared. So by September, we'll have the first buildings ready and maybe the entire factory. And in OSAT, we do business this year. For last quarter, we targeted about 100 crores, and I think we would definitely well on our way to do that. In PC board, we'll start from the first quarter of next year. And in both the cases, we have got tied up anchor clients. And in fact, in OSAT, we had earlier 2 anchor clients. Now the third one, which is joined. And we're really getting very good traction in those 2 businesses. They're decidedly margin accretive businesses. So our plan is basically to make sure that we're able to grow those businesses even post-government subsidy regime. And
what will be that % of revenue, sir, from them in the next 2 years?
FY28, we had earlier said about 2,000 crores from these 2 businesses out of the 9,000 crores that we had planned about. So maybe they would exceed this 2,000 crores number. So maybe we'd probably exceed the guidance of $1 billion too.
Okay. All right, so we're going to leave it on that note. Thanks very much for joining in and speaking with us. So confident in terms of the $1 billion guidance for FY28. That's Kaynes Technology. Not too deterred in terms of the tariff situation. Those are the DCB numbers as well. So maybe that should come up for you. It seemed as though the asset quality was quite intact at this point. So maybe the stock should come up for you, up around 1% for DCB Bank at this point. We'll take a short break, get you more on the markets once we're back. Stay tuned.
Welcome back to Halftime Report on CNBC TV18. That recovery is what we're seeing coming in for the market right now. We're seeing 24,850 levels. About that is what the Nifty is trading at. But US President Donald Trump has actually said that US will levy the 25% tariff on India. Sonal is here to decode the impact of this that could come in for OMCs as well as the chemical sector. Sonal.
Thank you so much for that. Well, do remember that India is importing 25% of its oil from Russia. And Donald Trump, apart from that 25% tariff, did say there'll be a penalty because India is importing that oil from Russia. So important to note that as well. But if we talk about the impact, there have not been very specified contours of this tariff on oil and gas in particular. So DAM Capital says, though there is no current incremental impact, so to say, as a part of the overall trade deal with US, it could be the most impacted sector after autos once more granular details come out. They say it could be about commitment to purchase US ethane, US gas. Now, do remember, we do have a lot of imports coming in from the US when it comes to gas. So they say there could be a possibility that there will be incremental contracts, there will be incremental capex that the US could ask India to make, and that would mean higher capex from companies like GAIL and Petronet LNG. But again, there is no finality on this one. Nuvama says that oil marketers and refiners could be hurt as India currently imports around 1/3 of oil at meaningful discount from Russia. However, important to note that there have been sanctions earlier by the European Union as well on Russia when it comes to crude prices, crude capping as well, and that hasn't impacted OMC so much, and this is something that they had indicated in the last quarter as well. So it is the developing story that we are talking about. In terms of chemicals, there is no meaningful impact till the time there is some clarity on tariffs on China, because that's the biggest competitor in terms of inputs and final products as well. So all depends on what happens with China when it comes to the final tariffs. If it is lower for China, we will be at a disadvantage, but it could be vice versa as well. So all in all, more details are awaited. So far, we are watching out for details on what happens to imports coming in from the US when it comes to shale gas, ethane and spot LNG as well. And overall, what happens with Russian crude oil prices, which we are importing on a large scale.
Okay, yes, absolutely. Lots of moving parts. Thanks very much for that, Sonal. In fact, for pharmaceuticals, it'll be interesting to see, because as of now, there's no clarity in terms of whether or not or what the tariff situation would be. But in any case, the feedback that I've got is that if it's till 25%, there's a likelihood that it's going to be passed on to consumers in the US, and there will be a churn of portfolios. The products which cannot actually have high margins on account of that will probably have to be removed from the portfolios that Indian pharma companies do have. Well, on that note, we'll take a short break, but we'll get you a lot more on stock-specific action. Stay tuned. Welcome back. Well, picking up pace for the market, so up around 18 odd points currently for the Nifty. We have the mid-cap index, which is just about lower by around 0.5% now, and the Bank Nifty is seeing incremental gains. So at the high point of the day currently for the Bank Nifty, up around 134 odd points. In terms of stocks, it is a medley of stocks. It's completely sector agnostic at this point in time in terms of the Nifty stocks which are gaining. So the top gainer is HUL reacting to numbers, followed by JSW Steel. We do have Nestle India, ITC, Power Grid, Hero MotoCorp, Britannia, all of these stocks which are gaining at this point in time. Maybe there's a little bit of veering towards the FMCG space because of some amount of defensive buying. Axis, ICICI Bank, all of these stocks from the banking space currently in the green. Well, with that, it's a wrap on Halftime Report. Business Lunch will take all the action ahead. Stay tuned.